So hi everyone, I welcome you all to my YouTube channel. So this is a very important video from the topic of construction contracts and tendering. So in this sequence series, we will be discussing three important terminologies that are associated with the construction contracts and tenders, which is nothing but your defect liability period, your retention money, which is also called as security deposit, and what is your bank guarantee. We'll be understanding them from the basics to the detailed fashion, and we will also be taking some regular examples from the contracts or some practical examples also. So watch the video till the end, and I'm very sure that after watching this video you will definitely not confuse between three terms. You will be totally aware of these three terminologies. So without any further delay, let's get started. So the first term is your defect liability period. As the term suggests, defect is something which goes wrong, which needs repair. Liability means to hold the responsibility, and period is nothing your time frame. So we have broken this complete term into three things, which is defect, liability and period. So which shows that it is a basic time interval over which someone will have the responsibility of repairing the defects. Okay, so who will have this responsibility? The contractor will hold this responsibility, and it will have a certain time frame like 12 months or 24 months or 36 months depending on the item to item. Okay, so defect liability period is also called as your rectification period or the warranty period. Now see, for example, you order a watch from Amazon. If you order a watch, they will give you some warranty period depending on the buyer, depending on the seller. Suppose they give you a warranty period of 6 months. Then in this warranty period, if while using your watch you face some technical issue or there is some error in the watch, then they will repair that particular error. Similarly, what happens when you hand over a complete constructed facility, like you have constructed a residential flat or you have constructed some hospital building or anything, then you will hand over this facility to the client or the owner. You have completed your work. Now what will happen? Client will start using this facility. For example, this is a residential flat. Now what will happen? Client will sell these residential flats to the people who want to relocate into these flats. Those people will come as the occupants and they will start using these flats. Now for example, while using the flats, there are some problems like leakage problems, or maybe there is dampness, or maybe some quality issue with doors, windows, with aluminium works, or maybe your ACs are not working properly, your ducts are not working properly. Anything can be possible. So in this case, there is a certain period in which the contractor who has constructed this facility is eligible, is liable or responsible to repair all these issues with his own money. Okay, so this period is called as DLP, defect liability period. Now this period will be different for different items. For example, we cannot say that for HVAC element, like for example there is one HVAC, heating, ventilation and air conditioning. For this particular unit there may be a certain DLP period. For a certain building, suppose there is one building, building 1, which is a residential one. For this building there may be a certain DLP period, which is DLP 2. Similarly, for one service building, there may be another DLP period, which is DLP 3. So it's not at all necessary that for the complete project of X crores, the DLP period will be constant. So DLP is not at all constant. It varies on the building, on the unit, on the item also. I hope this thing is clear to you. Now see, one more thing which I need to explain in this is, for example, you start a project on 1st of January 2023. So this is the actual start, and what you do is you take maybe 12 months to complete the project, and finally your project gets completed on 31st December 2023. So this is your completion, and you hand over the facility or the hospital, whichever you constructed in this 12 month, to the client. Now after this point only your DLP period will start till a certain point. Now these points can be many number of points, but ultimately there will be the final point after which you won't have any responsibility. So this period is called as DLP period, and it starts after your completion of the project. This completion of the project is called as virtual completion, and this completion of the project is called as successful completion. That means after you complete the period of defect liability, then your project will be successfully completed. At this point you will receive a virtual completion certificate, and at this point you will receive the final performance completion certificate from the client. Okay, so I hope this thing is very much clear to you all. And also remember that during this DLP period there may be occupancy by the people. Like people may occupy the facility that you have constructed, because once you occupy, then only some defects will be visible to you, and then only it will be required to be corrected. Okay, now there is one term also called as punch list inside the defect liability period only. See what happens after you complete this facility and you hand over the project, the client and the contractor who has constructed will visit to the site, and they will together visit the site, and at that point of time they both will make a note of all the defects or all the repairs that are to be corrected. So this list, which is made after the completion of the project and handover of the project to the client, then during that visit they make this list, which is the punch list. Okay, now I hope this thing is very much clear to you all. Now moving on to the second point, which is nothing your security deposit or the retention money. Now see, this security deposit will use the term of DLP period. So that is why I explained you the DLP period before explaining you the security deposit or the retention money. See, it clearly states that it's a security deposit. Security, when do you need security? When there is some risk, to safeguard from the risk. And this is also called as retention money. Retention means to retain. To retain means to keep you with yourself. So which shows that client will keep some certain amount of money as a security deposit, which is nothing but some backup amount for client to be used during the DLP period, defect liability period, in case, just understand the definition, very easy definition, contractor does not cater to the defects and the repairs. Now I will explain. See, I already told you that this is the start, this is the handover, this is start, this is handover or the completion, and this is your DLP period, and this is your successful completion, this is your virtual completion. Now see, if the client pays the contractor all the amount during this period and does not retain any money with him, then what happens is contractor may tell that I won't help you out with any defects during this position. Now the client will have no money in his hand, like he has already paid all the amount to the contractor, so now client has to bear all the defects from his own pocket. So to safeguard the client from this particular risk, what the client will do, they will hold some amount as a security deposit, also called as the retention money. What are the possible chances is, like during the starting of the project, before the start of the project only, the client may take some particular amount from here, like some in the form of money or in the form of bank guarantees or something like that. Or other case may be when the client has to pay to the contractor for the running bills, then in that case, for example, this is month 1 bill, this is month 2, this is month 3, this is month 4. For example, the contractor did a work of 300 lakhs in first month, 400 lakhs in second month, 500 lakhs in third month, 300 lakhs in fourth month, and finally 100 lakhs in the last month. That means the total work done is equal to the total contract value, which is nothing but your 900 1600 lakhs. So this is the total project value, that means 16 crores, 16 CR. Okay, so this is the project value. Now usually what happens is, if you have done 300 lakhs of work in first month, then you will submit a bill in the second month. So you submit the bill in the next month, first month in second month work done in third month, and so on. 300 and 100 in month 6th. In 6th month you will submit the final bill. This is the final bill, this is the first bill that you have submitted. Now you will submit it on first date of the second month. So client will take maybe 15 days or maybe 20 days to pay you. So now what client will do, client will retain some particular amount from this bill. Let's say the client retains 5%. This retained amount is nothing but your security deposit. He will not pay you full amount, because if he will pay you all 16 crores value during these 5 bills, then you will run away during the defect liability period and you won't spend the money for repairing the defects. So client will retain 5%. So how much it will retain for 300? It will retain 15. Okay. For this the client will retain 20. For this the client will retain 25. For this client will retain again 50, and for this client will retain 5. Okay, I hope this is clear to you. Now the client will pay you 285 lakhs in the second month, because the client has retained 15 lakh with him. Similarly, here the client will pay you 380 lakh. Here the client will pay you 475. Here 285 and here 95. Okay, I hope this part is clear to you. So overall you will be falling short of 5% of 1600 lakh. Okay, so this is what the retention money is. Now the client has 5% of 1600 crore rupees, which he will retain with himself and may use during the defect liability period if you tell no to repair the defects. But if you repair the defects and you reach to the successful completion period, then the client will refund you all the amount that the client has retained with himself. Okay, now see, just let us deep dive into this. Now see, in what form you can submit this amount. See, what happens is, while you submit your bids, that time you don't know whether you will win the contract or no. That time you submit an amount of EMD. What is EMD? EMD is nothing but your earnest money deposit. So when you submit your earnest money deposit, which is nothing but your maybe 1 to 2% of the tender value. So what happens is, to all the contractors who did not win the contract, the client will refund this EMD value. But for you, the one who won the contract, this EMD value will be used as the security deposit. For example, your project is of 100 crores. So let's say EMD is 1%, which is nothing but your 1 crores. But your security deposit is, let's say, 5%, which is 5 crores. So now instead of returning this EMD to you, the client will retain this EMD of 1 crore plus ask you for 4 crores more to get this security amount. Okay, so you can either pay all this in cash or you can pay as BGs. This is not your choice. Actually, this is the client's choice. The clients will mention the terms and conditions in the contract itself, that whether you have to pay the security as cash or whether you have to pay this as your BGs. Okay, it may be possible that you have to submit this as full lump sum amount. Full 5 crore you have to submit as it is. Or you may also be required to maybe submit it on a percentage basis, or maybe you can submit it in the form of the BGs also. Okay, now when will this release? Let us talk about the release also. Release of security deposit. So when will the client release? See, there are some cases possible. Again, I will make this diagram. This is the start. This is the virtual completion or handover. And this is your what to say, this is your successful completion, this is your DLP period. Okay, so first case can be, case number A can be that full value will be refunded to you after the virtual completion. Like for example, if the client retained, let's say 5 crores, you have given 5 crores at the start of the project. Now after virtual completion, the client may refund you full 5 crore after virtual completion in place of an equivalent bank guarantee. That means if client agrees, then at this particular point you can ask the client that I will pay you a bank guarantee of 5 crore rupees, then you refund me my 5 crores cash and I will pay you one bank guarantee of 5 crore rupees. This might also be the case. Now this bank guarantee, what is it? I'll discuss it after this. So this bank guarantee, now it's almost equivalent to cash only. The client can use this bank guarantee in case the contractor says no, and the client can encash this bank guarantee from the respective bank from where this bank guarantee has been issued. Okay. What is the second case? The second case is that 50% of the SD, security deposit, is released after 1 month of virtual completion and rest 50% after DLP period. That means at virtual completion, out of this 5 crores that you have paid as security deposit at the start of the project, client will release 2.5 crores at virtual completion and balance 2.5 crores after DLP period, which is nothing, maybe your 24 months or 12 months or something like that. The final DLP period, latest one. Okay. What can be the third case? The third case can be the client says no, I don't want any BG/CG, I want your cash and I will give you full 100% refund only after DLP period. This can also be the case which is possible. Other case can be the client says that you give me 2 crores cash and rest 3 crores BG, or 1 crores cash, 4 crores BG. So this you have to negotiate with the client, that what part of this cash he can replace with an equivalent BG. But just remember, the total of cash and BG should be equal to your security deposit. That's it. So I hope this much is clear to you. Also remember, in case the contractor breaches the contract and does not serve the DLP period if the client asks, then in that case the client can forfeit this amount and he may withdraw this amount and he may not at all return this back to the contractor, and also the client can use this money for the DLP period, and also the client can engage a third party departmental, maybe third party person to repair these defects. Okay, so this is also possible. Now see, this is one example of a clause that is related to the retention money from a tender document. I have extracted this clause. So what this clause says, that retention money, which is also called as the security deposit, will be 5% of the interim bill subject to a maximum of 70 lakh rupees. That means whatever bills you will submit, he will deduct 5% from those bills. From every bill he will deduct the 5%. Also one thing I forgot to tell you, that this retention money is somewhere around 2.5% to 5% of the total amount, of the total contract value. Okay, I hope you get it. So maximum of 70 lakh rupees, like this 5% plus 5% plus 5%, this can be a maximum of 70 lakh. It should not exceed 70 lakh rupees. Okay, so if by chance it is less than, by chance if it goes 75 lakh, then in the last bill he will not deduct 5%, instead he will deduct 3% or 2%, but the maximum value that the client can retain is 75 lakh rupees as per the condition of the contract. And the 70 lakh rupees will also include the EMD of 50,000 that I already explained you, that initially you have to submit EMD. The contractor who won the contract, that part of 50,000 will be considered as the retention money only. Now see, 50% of the retention money shall be released after issue of completion certificate and balance after the rectification of the defects pointed out during the DLP period. So I clearly told that, see, this is start, this is virtual completion, this is start, and this is your DLP. Now the client says that I will release 50% here and balance 50% I will release here. Okay, so this is as per the contract condition. Now see, 50% of the retention amount can be accepted in the form of the BG up to the issue of completion certificate. So this particular amount can be accepted as a BG. Now you can give an equivalent BG and take this 50% amount at the virtual completion itself, but for the same amount. For example, suppose this 50% is 2.5 crores and let's say this is also 2. This is example. Anyway, this cannot be 2.5 crores because limit is 70 lakh. This is for a different project. This example I am taking for a different project. Then this BG, you can prepare a BG, you can get a BG from the bank of 2.5 crore and you can give this BG to the client and you can take back your cash of 2.5 crores which the client has retained from your interim bills. But balance 50% cannot be substituted for a BG, which is clearly written here, and balance 50% as cash only up to the DLP period. That means this 2.5 crores you cannot substitute with a BG, but cash will only be there with the client. But the client is clearly saying that for this 2.5 crore rupees you can get the interest benefits. The client will pay, like, keep this 2.5 crores as a fixed deposit in some particular bank and will pay you the interest benefits till the completion of this DLP period. So this is one clause of a particular contract or a tender. Okay, so I hope the retention money or security deposit part is very much clear to you. Now moving on, the last terminology, which is your bank guarantee. What is bank guarantee? We have been talking about bank guarantee a lot now. So what is a bank guarantee? And who gives this bank guarantee? So as the name suggests, bank guarantee. Bank is guaranteeing, bro. So bank is giving a guarantee. To whom it is giving a guarantee? So what is bank guarantee? Let us write a definition. Type of legal document where issuing bank, the bank who is issuing this bank guarantee, guarantees or promises that if contractor means the applicant who is applying for this bank guarantee, breaches the contract terms and does not pay for the DLP period, then losses of client can be covered by a bank. Now see, what happens is, for example, the client has agreed that 2.5 crores you can take, but you have to substitute the 2.5 crore BG. That means the client is giving you 2.5 crore, but suppose now the client only has this 2.5 crores left with him, which he will give only after the completion of DLP period. But for example, during the DLP period, there is some big major quality issue which costs 4 crores. Then since client only has 2.5 crores, so if contractor says no, I won't help you out with this 4 crores value, this is not my fault or something, then client will use this 2.5 crores but balance 1.5 crores. Now client does not have 1.5 crores, the client has a BG of 2.5 crores. So what client can do? Client can go to the bank who has issued this BG and tell that my contractor, he has breached the terms and he is not agreeing to complete the DLP period with this 4 crores value. So give me 1.5 crores of the amount from this 2.5 crore of the BG. So in this case, the bank will help the client to give 1.5 crores from this particular BG. Okay. Now what is the use of bank in this whole process? Ultimately you will say bank has to give money and all, but the bank will receive some particular interest on the BG or some premium amount which is on the quarterly basis. Like for example, if the client has submitted 2.5, the contractor has taken 2.5 crores BG, then every quarter some 0.75% or maybe 0.50% of the interest has to be paid by the contractor to the bank. So this is what the bank is getting the advantage from. Okay, Now see, how will bank issue this? Suppose this is a bank. Now the contractor will go to the bank. This is a contractor. The contractor needs a BG of 2.5 crores. See, now the contractor will go to the bank and ask that I need a bank guarantee from you equivalent to 2.5 crores. Now what the bank will do, bank will not trust the contractor. Instead, bank will see various factors, like he will see the transaction or financial history of the contractor with this particular bank. The contractor will only go to a bank from where all his transactions are going on, where the contractor has his bank accounts in this bank. So the contractor will only go to that bank. So the bank will see what is the credit history, what is the transaction history, what is the debit history of the contractor. He will also see that what is the previous banking history, what is the cash in accounts. All those things the bank will see, and the bank will give a BG paper, bank guarantee paper, which the contractor has to sign. This BG paper will take the power from the contractor that in case the contractor does not comply to the contract for the client, then in that case the bank can mortgage the property of the contractor, or he can also take some particular amount from the contractor. Like see, initially the contractor has to give some security deposit to the bank for getting the bank guarantee, but this security deposit will be very less compared to the amount of the BG. Okay, so he can also avail that security deposit to the client in case the contractor breaches the contract. But ultimately, what is the use of giving a bank guarantee for the contractor? That it will improve the cash flow. The contractor does not has to pay 2.5 crore to the client for this DLP period. Instead, he will give a bank guarantee in less amount, and he can avail the opportunity of 2.5 crore cash in hand with himself. Otherwise, if he gives this 2.5 crore to the client, his 2.5 crores will be simply blocked for the complete DLP period. He can use this amount in some other project during that period. So this is where the advantage of bank guarantee comes from. Okay, so I hope all these three terminologies are very much clear to you. You can also check out other videos on construction contracts and tendering. So do subscribe to the channel, like this video. I'll be coming up with many more videos. Thank you everyone.